Hello and welcome to the first Automotive Logistics live stream of this year, Building the Automotive Supply Chain of 2026. I'm Marion Gillich, I'm the Deputy Editor at Automotive Logistics, and I'm going to be leading us through a discussion today where we're talking about embracing opportunity in dynamic and volatile markets. We're going to speak about some kind of practical and timely things about resilience, and how to navigate 2026. And also we will have a Q&A during the live stream, so please do send us in any questions you have into the chat. To quickly run through today's show and kind of set the scene a bit with some of our key editorial themes that we'll be speaking about. I've got Christopher Ludwig, the Chief Content Officer of Automotive Logistics and Ultima Media, here in the studio with me, and we're going to speak a bit about some of the tariffs and trade volatility that's happening at the minute and how people are dealing with that through scenario planning. Then if we just look at the agenda again, we'll bring in Marion Gillich, who is the Head of Supply Chain Resilience Management at Daimler Truck. And Marion will be talking about building resilience into real-world decision-making and what that looks like. We'll have a quick conversation, the three of us, in a roundtable sort of format where you can answer, or where Marion and Chris can answer your questions. And then finally, to round it off, we'll speak about the USMCA and some of the compliance issues that are set to come up this year. So if we go to the next slide, you'll see that over the past couple of years, we've really been providing lots of coverage on risk and how to kind of be resilient in the face of that. And there's been more and more uncertainty, and it keeps ramping up. We used to have black swan events every few years, and now it seems like there are multiple of them per year. Some of the things that are affecting the industry at the minute, obviously lots of tariffs and trade negotiations. There are suppliers who might be facing distress this year, especially in Europe. We've seen the likes of Bosch warning about its profits this year. We've also seen logistics providers kind of struggling in a more fragmented market. The likes of Standard, Forward and Freight, who have had to pause operations recently, is a big one that's going to affect a lot of people in the supply chain. And then we have raw material dependencies that are shifting due in part due to these trade negotiations, shifting EV policies, natural disasters. We've had this snowstorm in the US that's really, making it more challenging for the supply chain. And then, of course, compliance and regulation issues as well. So if you want to take a look at some of the most recent coverage on our website, you can scan the QR codes there. Chain as a competitive advantage. Chris, welcome. It's great to be able to speak to you a bit about this.
Thanks, Megan. Thanks for having me. Great to be here.
Yeah, great to have you. So yeah, I was hoping that you could maybe give us a bit of an overview of some of these risks. I know at ALSC Global in Detroit at the end of last year, you said to the delegates there that there's really no going back to the industry that we once knew. And that was only 4 months ago, and now the risks are even bigger. What do you see as some of the biggest challenges facing the industry at the minute?
Yeah, it's all gotten very simple since then, hasn't it? The world has sort of settled right down. I mean, I think you hit on many of them, obviously, certainly at the sort of geopolitical macro level. And I think if we think about risks right now in the automotive supply chain in 2026, we certainly have to break them down into a few levels. market level, and certainly then at the operational sort of logistical level, which might be hitting people sort of day by day. Now, some of these are things that our audience and experts in the supply chain just have to deal with. It's year on year. So weather, weather, extreme weather, although that's certainly seems to be getting more extreme. It could be a supplier fire, all those kind of stuff. But I think to your point, we're seeing disruption come at faster pace, and combined with these other uncertainties is what's really changing it. So maybe just to pick on a few of them. So you mentioned the tariffs, and of course that's just not going away. And I think the development now is probably less that there are tariffs, because at this time last year it was the will he, won't he, on again, off again sort of announcements just after the inauguration in the U.S. Now post Liberation Day and number of trade deals, to a certain extent we know the tariffs, but just when we think we know them, maybe we don't know them.
Yeah.
Point in case, South Korea announcement, the fallout from the Greenland debacle or debate, which then was pushed off, but not even just out of the U.S. I mean, we obviously see a trend elsewhere. Mexico has brought in higher tariffs for non-free trade countries. The chance of various retaliation seems strong when we get into the trade war territory. And clearly that was part of the fallout with China last year. China has an absolute ability to turn the screw if it needs to on critical minerals and certain supplies. So those sorts of aspects are what are so hard to predict, because they're vulnerabilities. I think then, and I'm sure we'll get into some of this together with Marion, but how do we then navigate other black swan or other major disruptions that may come? There is the risk, more than a risk, of other wars breaking out. Iran perhaps being the most obvious, that may occur just maybe in the coming days, maybe not, with the fleet sort of building up. That would, at a minimum, certainly put on hold plans to reopen the Red Sea, would have an impact on energy prices, and of course major horrific disruption elsewhere, both on a humanitarian and potentially economic side. That could happen. There could be further outbreak of the Ukraine war, with Russia aggression in other parts of NATO. There could be a China incursion into Taiwan. It could be this year, it could be next year, it could not come. But these are the sort of scenarios that the supply chain has to really think about. Yeah. Not just in a war game sense. These are real possibilities. So that, and I think we'll talk about it later, like what happens with USMCA. To a certain extent, it feels null and void, right? But it comes up now for negotiation. It's a big uncertainty around that. At the kind of financial market level, significant changes. We've now seen the EV shift in the US because the policy changes has come so swiftly. So combined with perhaps slower than expected demand, there's now the lack of incentives, and this is shifting away from EVs. We saw the write-downs from certain OEMs. The EU is adjusting its targets, although still keeping pretty aggressive ones. And this all has, whilst China powers ahead, but this all has an impact on the overall market stability, the product planning, and ultimately how the supply chain is oriented. And in the shift and changes come, as you raised earlier, potential for financial distress at suppliers. Yeah. Drops in profit at certain manufacturers could lead to other cuts elsewhere. We're starting to see that. So this needs to be understood. How robust is your supply chain? How robust, right down to your logistics provider, how robust is the health of these players? And then finally, as alluded to, the operational disruptions, which we do see frequently. We saw last year with the fires at the aluminum suppliers in the US. That had such a big impact across many parts of the supply chain, at least from a cost side, moving many things around. And obviously, the interconnectedness of the supply chain has not gone away, but the vulnerabilities have become more exposed, and those risks are only escalating. So, it's a complicated soup. You add into that the risk of cyber attacks. You add into that the other regulations and compliance changes, and higher costs that are coming in the EU. We have a carbon pricing, which is coming into other parts of the supply chain now and impacting certain material purchases, impacting shipping at a point. So all of these risks and changes are are things that have to be seriously looked at across logistics and supply chain departments in 2026 and beyond.
Yeah, yeah. And obviously you speak to a lot of the leaders in logistics and supply chain. How are you seeing some of the effective strategies for resilience really take hold this year? Like, how are these leaders predicting and taking on these risks?
Yeah, I think I'll try not to go into too much detail, because I think we can maybe also unpack some of that with Marion from Daimler Truck, which would be very interesting. But I see it certainly in a few different ways, kind of at a high level. One is absolutely the visibility in the supply chain and visibility in monitoring. So developing a kind of control tower, command center view of your operations, which is not new. People talk about control towers for decades, but definitely it's being enhanced by digital tools, by better data strategy and integration, and of course then layering in a certain amount of machine learning, AI, that can help to pick these things up. Mm-hmm. So I almost don't know now of a manufacturer that doesn't have a serious project to better integrate this data. But there are some who have been working on it for longer and are further along, and I think are able to point to some real obvious benefits of doing that. So that's definitely one important area. The other area, if we look at the sort of supply chain design, network design, both from a logistics and a kind of procurement supply chain point of view. Now, with trade walls coming up, tariffs, with these risks, there is a fragmenting of the supply chain back towards a certain amount of regionalization and, where possible, localization. We should never overplay that, because it just isn't something that happens so fast or can happen so fast. But where it's feasible and possible, it absolutely is happening. And I think we're definitely seeing more of that as a resilience factor. But the interesting parallel to that is resilience is also about options, having multiple options where it makes sense. So having a backup supplier in case of a disruption, and that might go against localization. So when the fires for aluminium happened in the U.S. last year in North America, there was definitely a lot of extra aluminium being flown in from other regions, despite there being 50% tariffs. But and at that point, the trade-off was keep the resiliency, keep production going, pay that extra price. So, and in logistics, having maybe multiple ports of entry might be another resiliency option. In Mexico, we spoke to some who, for example, in the same port, had different performance results in two different terminals from the customs side. Mm-hmm. So even just having backup options, sometimes it comes down to something at that sort of level. Yeah. So I think those are a few of the areas that I would point to as obvious strategies for resilience.
Yeah. Yeah, and I'm sure we'll speak a bit more about this a bit later in the live stream too, but just touching on that point that you made about different strategies for resilience and staying a bit more flexible. How do you see the industry getting better at being more proactive? It's hard to balance, having to face each crisis on a day-to-day basis, let alone think ahead. Yeah. So how do you think the industry can get better at that?
Yeah, and then again, I think there's a kind of a technological approach and then maybe a more personal, direct approach. One is certainly building on what I said earlier, these sort of control center, command centers, is having a data strategy and a visibility strategy that both actively monitors a certain amount of passive risk across the supply chain, and then can pinpoint where real issues might arise through direct connections. So it might be, your logistics is connected to your TMS connects to your ERP, and you have a real-time visibility of trucking movements, and your inventory levels, right? So this is a basic level, fairly basic level, but an important level that more companies would try to reach, to have that visibility and be able to see a problem before it really hits the plant. But then getting into more predictive modeling, where thanks to having data layers and sort of machine learning layers, you can see based on the data that's coming in where a potential might arise, and take a preventative action against that. But I think this comes down not just to the tools. There are incredible advancing tools, but if you don't have, the right connectivity, the right data standards, and importantly, if you don't have the teams trained, able to use it, interact with them, and then don't have the supplier partnerships, with the trust to share that information and help one another, You need that, I think, to really then move into proactive and then ultimately into more predictives. And that also then means, sometimes it's picking up the phone, of course, as well. Talking to one OEM who, after a disruption, really saw the personal value of certain relationships with providers who went the extra mile to help them. Be it in waiting for shipment times or understanding payment terms, whatever it might be. This direct relationship shouldn't be underestimated on top of all of the technological areas. So maybe those are just a few areas that I would highlight.
Yeah, that's really interesting to hear that from that OEM perspective too. Thank you so much, Chris, and we'll hear more from you in a little bit. We're going to bring on Marion in just a moment, but first I just wanted to highlight some of the other ways you can keep up with our content. You can see if you scan any of these QR codes or click the links in the chat that you can keep up to date on our website. We've got some of the latest news and features, interviews to do with some of these challenges that the industry is facing at the minute. For example, the change in trade relations between the US and Canada at the minute. It's changing on a very, very fast turnaround, so it's great to keep up to date with that on our website. You can also check out our content calendar for the year to see what kind of key themes and topics we'll be focusing on throughout 2026. And you can subscribe to our magazine there as well. And we will have lots about resilience in our upcoming spring issue. So now I would like to welcome someone who is very familiar with resilience as a competitive advantage. As Head of Supply Chain Resilience Management at Daimler Truck, she manages tracking supplier insolvencies, preventative mitigation of risk, and compliance and sustainability. She also heads up European contract management and takes care of supplier evaluation globally. So please welcome Marion Gillich. Hi, Marion.
Hi. Thanks for having me.
It's great to have you with us. Thank you for joining us. Marion, I wanted to ask you a bit about risk management as the core of your role at Daimler. What does that look like on a day-to-day basis, and what does proactive decision making mean in practice?
In this fast-changing world, and Chris and you were talking about those things that are changing so rapidly, I think none of my days looks the same, which is also a cool thing, right? But more generally speaking, I mean, what we're doing in Daimler Truck, in my department of global resilience or risk management, is, I mean, we're really looking into how can we use the data that we have, and how can we turn the data on suppliers, on the supply chain, really in actionable items, right? So we're looking into creating transparency. With that transparency, basically make the right assumptions, and then again translate them really into actionable items together with our buyers and supplier managers, right?
Yeah.
And I think when we look into risk management in the automotive context, a lot has changed and evolved also over the time, right? I think when you look into how maybe risk management was set up a couple of years back, it was more, about periodic risk checks or heat maps that you would look at every now and then, maybe once a quarter, whatever. And it was a lot about having incident response plans, which means the incident happens, right, and you need to respond to it, right, or recovery plans then to have that. And I think what we're doing, and that's, I think, also the direction that risk management is going, the new era is really data-driven, right? I like this quote of Peter Deming that says, "I believe in God, all others must bring data." So you really need to make sure that you have your data right. It is focusing on tier N visibility, which is also a new thing that I think also a couple of years we haven't had so much on our agenda as we do have it now. And it's about a continuous monitoring of your suppliers and the events that might hit your supply chain, and then have pre-positioned options and playbooks ready.
Yeah, absolutely. Just touching on what you were saying there about the importance of data. You said previously at one of our events that you value scenario planning and data preparedness over things like predictive algorithms, because of a tendency to sometimes provide false positives. So how can you ensure that you don't fall victim to that trap? Can you do more supply chain mapping to kind of filter that out?
Yeah, I mean, supply chain mapping is an amazing tool, and we still need to utilize it better. The way probably it is done today, it still creates some of the false positives. It's still important to use it and to use also AI and AI-based mapping, but then combine it. One is with still human intelligence to it, but it is also about clustering your portfolio, your suppliers, your commodities, whatever fits best to you, and slice the elephant and look at smaller portions of your portfolio to do then a risk-based mapping. And again, together with AI, with technology, and with a human touch, then validate the supply chain really one by one.
Yeah, absolutely. That actually, you mentioned that at our digital strategies event at the end of last year as well, where you spoke about these risk-based clusters. How do you prioritize these in practice?
Well, I think there are different approaches to it. How you can slice again your suppliers or your commodities. One is you can look at it. Let's call it composition based, right? Where you look at your commodities, for example, that have normally a higher concentration of critical raw materials, right? So you focus on those commodities that have higher content of raw material, and you look into the supply chain for those, right? This would be one way of doing it. I think you can also do it, let's say, location based. At least on a tier 1 level, you also know approximately where your products are being produced, and there are countries on an ESG country risk map that are more critical and are more prone to, let's say, human rights violations. And then you go through this location-based approach where you start with the higher risk countries where products get produced. Or you could also do it at internal view. I would call it at a value at risk view or dependency view, where independent from the commodity, the content of it, or the location of your supplier, you just have a look at your entire portfolio and you see which of your suppliers has the highest impact, right, on you, where you very dependent and you rather need to know what is the supply chain behind the tier 1.
Yeah. And in that mapping and looking at the different tiers of suppliers, what are the additional benefits of like mapping deeper and deeper into those tiers? Like how do you balance the benefits of that compared to the resources that might take up?
Well, I think the benefits, are obvious and repeatedly also pay back. One is you get more transparency, and then of course speed of reaction by faster crisis forensics is there. And take the Nexperia case, right? I think in the automotive world, this really gave us some sleepless nights end of last year. If we, and I mean not we as Daimler Truck, but we as automotive industry or OEMs would have known that Nexperia is such a bottleneck, that there is such a cluster risk, right? That at the tier 2, tier 3 level, it all comes to basically 1 or 2 suppliers, Nexperia being one of them, right? We could have diversified that much earlier. It happened now after the crisis, but a proper tier N mapping would have shown us this kind of cluster risk or bottleneck risk, right? So it gives us a transparency on these bottlenecks. And of course, there are certain regulations in the EU, from the EU battery regulation, or also UFLPA, Uyghur Forced Labor Prevention Act in the US, that also kind of demand that you need to do supply chain or tier N mapping.
Yeah, yeah. And obviously we have more of these regulations coming in all the time, which kind of puts the imperative on that. I was speaking to Chris just a bit earlier about the idea of partnership and building trust as a solution to kind of the resource difficulty of mapping and things like that. What do you think about that? Do you see partnership as kind of important to make sure that this is effective?
Yeah, I think, of course, I mean, especially now the partnership also between the OEMs and the suppliers is super important, especially when it comes to data sharing, right? And information sharing, creating that transparency together. I don't think that it's such an easy task if you want to do it alone. So you have to do it with your partners, with your suppliers, at least on level one, right, to bring it down. And you need to have the trust and the transparency on how this data, data that you're then sharing amongst each other is being used. And it should be used only for the purpose of course, making the supply chain more resilient. So apart from the trust, you might still need some kind of legal framework that you both agree on where to really use then, of course, this data.
Yeah.
And then you can decide, also when you have built up this trust, when you have a legal framework, one way of, again, jointly making the supply chain more resilient is, for example, just an example, stock buffering, right? So you might decide on a strategic buffering, stockpiling, but that doesn't have to happen on the OEM side. It can also happen on the tier 1 or tier 2 side. But again, it needs to be a joint decision where you need to work together to optimize, of course, also the working capital.
Yeah, I think that kind of ties in well to the next question I wanted to ask you. With all this, these challenges and risks that are quite unpredictable and, they kind of just defy prediction, companies are starting to rethink the just-in-time model because obviously you need to be a bit more flexible to be more resilient. How do you balance that up between efficiency and resilience? Where do you decide to run a bit leaner, and where do you decide to build safety nets in to absorb potential shock?
That's a tough one, right?
Yeah.
It's not easy to answer. It truly, there is not one fits all solution. But I think you're right. That's my personal opinion that the overall GIST approach, which we have seen throughout the last couple of decades, right? It was great, and it was because it was possible, right? It was a super way to optimize your working capital, to optimize your stock levels. And it was possible because when you look, for example, at the global supply chain pressure index, right, which is an indication of how much pressure there is in general in the supply chain, you can see that over the last decades, right, when you look before COVID, the supply chain pressure index was, very flat. So there was not much pressure in it, so you could do the GIST thing. So globalization and global sourcing was possible. But then, of course, with the COVID crisis, but even now, you see that this index is and will continue to go up and down, up and down. So I don't necessarily think that just JIT is still the right way to do it, because you have to think about, again, strategic buffering, right? And again, where you do it. There might be dependencies from in which industry you're in, what kind of depth of added value you have, and what is the geographical spread of your supply chain. And again, it's about clusters that you have to build, right? Nowadays, probably very geopolitical or geolocation-based kind of clusters where you say, okay, this is impossible for me to do a GIST if it's crossing maybe more than 2 or 3 country borders.
Mm-hmm. Yeah, and that's a lot of planning that needs to go into place ahead of time as well. Just looking at some of the risks facing suppliers at the minute. Obviously, we mentioned up top the risk of supplier insolvencies in Europe this year. how real do you think that risk is, and how can people prepare for it?
Oh my God, the risk is real and really persistent, especially for Europe, and especially within Europe, I would say for Germany. We have multiple sources, right? You can read it, for example, also in the German Handelsblatt or in other media, that are even talking about a structural collapse when it comes to the German industry, and especially the automotive industry, automotive supplier industry, but also metal manufacturing and machinery, right? So those are very critical areas. And we could already see a super increase from 24 to 25. And we are expecting another increase of corporate insolvencies, bankruptcies, of another 25% for this year. And with that, we are crossing the high levels of corporate insolvencies that we had in 27, 28 in the financial crisis. So we're already beyond that. So the risk is real and it's persistent. And unfortunately, I see it every day. Because we as an OEM, we are also very much affected by it, right? One is, of course, the risk for supplier disruption is there, but there is also a financial contribution that OEMs are supporting suppliers with in times of transformation. So the risk is there for us for the supply chain disruption and, of course, for, let's say, the financial impact. And apart from just the increased number of insolvencies that we see another thing that's happening is that insolvencies are taking more time. They're much longer in a period. A couple of years back, we would see that in the preliminary insolvency proceedings, a lot of companies were already taken over. Investors were found. So within, let's say, 3 to 6 months of declaring insolvency, there was a solution found. But nowadays, this time takes much longer and more so often ends up with either a private equity investor taking over or with the liquidity of the company.
And what are the effects of that taking longer?
The effects of that it's taking longer is, again, I mean, I'm speaking now from the OEM perspective, and especially, again, also from a German perspective, is that you have to pay much longer your loss contributions, right? That's a lot of money because you're basically financing the production of the parts if you can't switch that early, right? And of course, also the pressure on procurement and supplier management in quickly finding then new suppliers, trying to shorten the lead time that you have for testing, for tooling and all that. That's immense, apart from all the other influences, of course, that we have and cost pressure that we have.
Yeah. Yeah, and obviously with all this this pressure on the supply chain, it does in a way kind of force the supply chain to get better at dealing with this and create opportunities. How do you see the supply chain getting through this stronger and more resilient, with a view of looking at resiliency as an innovation opportunity rather than a defense on the back foot?
Yeah, I also always try to look at the bright side of life and of every crisis, right? And I also say never waste a good crisis. There's a lot of opportunity that we can use now, right, to come out much stronger. And I think that the crises that we see right now can actually support, layering the digital foundations and scaling digital solutions much more, right? So again, also as we were talking about tier N mapping, so I think this will have to scale much faster because of the crisis. I also see that we see some tailwinds from a regulatory perspective when we, for example, look into the EU Critical Raw Material Act or the Resource EU Act, where also, let's say, the regulatory body is really pushing a more diversified upstream and is, for example, looking into boosting recycling, right, and not being so dependent from certain countries. So I think this is also really supported by the crisis we're in. I also think that the industry, the OEMs, and also the suppliers, they're forced to learn to operate under uncertainty, right? It started also with the Suez Canal, and it's going on with semiconductor shocks that we see. So the organizations have to institutionalize resilience, right? Because they need to keep selling, and they're building that muscle. So you're building that muscle that you can actually turn risk into growth.
Yeah, absolutely. It's good to think about this positive side of things as well. I'm going to bring Chris back in for a discussion where we can also answer some of the questions that the audience might have. So please feel free to send those in. But just before we go back into the conversation, I just wanted to mention that Marion will be speaking at our upcoming event, ALSC Europe, which is taking place in Bonn in March. So you'll see the QR code there. If you want to scan it and attend, you can hear more from Marion speaking a bit about resilience, and you will also be able to see other speakers and OEMs there from the likes of GM, Volkswagen, JLR and Aston Martin, among others. So yes, definitely register, and we hope to see you there. So just jumping back into the conversation again, while we wait for some audience questions. Resilience is quite an intangible thing that's hard to measure. So I wanted to ask how you gauge success. Maybe Chris, I'll come to you first on that.
Yeah, so I think in terms of the OEMs and manufacturers that I speak to, and obviously we'll hear from Marion on this then, but I mean, I think there's a couple of ways. I mean, you don't know what you can't measure. And on the one hand, one aspect of this is what you've mitigated and avoided. So you want to see, okay, what did I not lose in production? I've spoken to some OEMs who maybe they saw a supplier go down and for whatever reason anticipated losing, let's call it 40,000 units by when, and managed to only lose 10, right? So here we've already can see I have saved 30,000 units or whatever what numbers might be. But there's other metrics I think you might look to, like time to recovery, how much quicker did operations get back to normal production. Certainly premium freight costs, expedited freight costs might be another metrics that you look at to say, okay, did we manage to reduce this? On the other hand, expediting material can be a kind of resiliency flex, right? If you needed to avoid a wider disruption, then you would have done that. And so, not to say that it's one simple metric alone, but I think naturally it will come down in part to those financial figures you can track. Mm-hmm. So for example, how quickly could you convert your working capital inventory back into cash? So these are harder metrics, or let's say hard metrics you can to a certain extent measure. And I think there's others which are probably harder too, but in between that you need to get that picture of it. But that's broadly speaking some of the more concrete ones that I would think, but I'm much more interested in some ways to hear what Marion thinks about how she would be measuring those.
No, I like what you were saying. You cannot know what you can't measure, and it's also measure what matters, right? So really think about what matters most to your organization, which again might be different for different organizations. But I think the time to detect, time to decide, and time to recover that you were also mentioning, right? When you have an incident per incident, where you then have to set yourself goals. So you need to measure them over historically over some time, and then set yourself goals. Then I think, again, how we are also doing it, we have a resilience score, which is considering all our suppliers, and we want to improve that resilience score that we're measuring over multiple categories, or at least not go down from that resilience score. And of course, again, we measure that over the time, and we see that, and we hope with our active supply base management, we can improve this resilience score by, again, having the different dimensions, but also looking into or having clear goals of which suppliers we're bringing newly into the landscape, right? So we have a threshold to come in that is already at a high resilience, because we don't want to bring in low resilience suppliers into our supply chain. And then, of course, the entire system would, of course, suffer.
Yeah. No, those are great points, and yeah, make me think, maybe to add, Megan, exactly on other metrics like Marion talked about. We've heard more about supplier scorecards in areas. So if you take cyber, for example, like that might be an area to have a specific cybersecurity scorecard to understand how vulnerable a particular supplier might be to attack. And of course, those attacks could come from so many different ways. It could come from a phishing email. It could come from a plant vulnerability. But there are active ways to try. And then obviously, if you have the playbook that can follow that, then that's an important point. So I like what you said there, and I absolutely can see that across other parts of the supply chain as well.
Yeah, definitely. And I think that the idea of cybersecurity threats too is something that we could do a whole other live stream on as well. But I've actually got a question for yourself, Marion. So Eduardo has asked, you told OEM and suppliers that they should learn to work with uncertainty. In your opinion, could AI help to minimize those uncertainties?
Yes, definitely. AI and data, I would put that now into the same bucket, are kind of the basis, and you need to have that right. However, I think in today's times, we are dealing with so many black swan events, right? That it's very difficult to entirely predict what's going to happen. And I think also that risk management, it's not about the last % of perfecting your forecast, right? It is really about being prepared to take decisions fast, because you cannot avoid risk. Or, but you can make sure that the impact of that risk is then reduced by having that scenario already played through and having your scenario playbook ready.
Yeah, absolutely.
So again, data, yes, as a basis, you need to have your data right. It cannot be that the next crisis happens. Let's say there's some, I don't know, new export restrictions, and then you first start collecting your data. Then that's a waste. You need to have that ready, and ideally, you already have played that scenario through, right? And you just have to press a button and you know exactly what needs to be done. So you cannot avoid that risk that happens, but you can definitely work on the way how fast you have your playbooks in place and how fast you react to it, and with that mitigate the impact.
Yeah.
And I could certainly imagine where you would use AI to help support building out those scenario plans and
Absolutely.
building those playbooks, right? If you took, because all of the AI would be based, of course, on a certain historical data, which is very powerful, but also is history and not necessarily what happened. So we talked to some OEMs, for example, in Mexico, where port disruptions and capacity issues and all kinds of issues at the border are to some extent expected, but they're not expected in the same way. They happen in different ways, and using the data just to predict them would probably be, wouldn't get you that far. But you can play out multiple different scenarios and backup options based on, using machine learning and AI data to kind of craft those. But in the moment, where the decision still needs to be made, that's probably not yet where we see AI really fully in place. It is definitely going to automate certain decisions that can be made, operational kind of aspects, but really choosing which scenario to run, I think is right now still very much firmly in the hands of the decision makers and people, and maybe it always needs to be, but will be continuously supported by AI and agents and data and things like that.
Yeah. I've got another question from the audience. It's not addressed to either of you, so I guess you can both answer it if you would like. It's an interesting one. So it says, the shift from just-in-time supply chains can create idleness at yards and warehouses. While natural and plannable, are OEMs really going to accept larger, less frequent orders and a lower velocity of goods? It seems wise to have a tolerance of JIC inventory, but unlikely with the hyper-focus on shareholder value.
Do you want to go first, Marion?
again, sorry, I don't want to be misunderstood in saying that JIT is dead. It's not, right?
Yeah.
It just has to be used maybe differently and more strategically than it has been before, because again, what of course comes from the audience, and again, working capital is all very important to optimize that, right? So JIT, yes, has to be, or continues to be an important thing and measure. We just have to really think where we need to have maybe some more stock buffering. And this can be, for example, semicons, right? These are small parts. It's not that you have to have a huge warehouse ready for it. So again, don't misunderstand me. JIT is still important, but I think it has to be used a bit more strategically and readjusted based on the criticalities and the scenarios that we see in the supply chain from now onwards.
And I think I would fully agree with everything said, and I would maybe also cite something that was talked about at an event that Marion also was at, our Munich Digital Strategies event, and there Jean-Christophe Deville, who's VP Supply Chain at Toyota, and you can be sure you'll always get an interesting answer about just-in-time, just when you ask someone from Toyota this question, right? And what JC really emphasizes that just-in-time should be about lowering the water levels, so having the visibility in your supply chain where you can see exactly what Marion alluded to. Where do I need inventory and where do I not, right? So lowering the water level means here I can see I have too much and here I can see I have too little. And it does not mean, so just in time does not need to mean, I mean, of course, if we understand it as the literal, the part arrives as it like the so-called pearl chain, whatever kind of other kind of terms we want to use. If we're kind of talking about it more in the lean sense, the more in the sense of the right inventory for the right production at the right time, then it absolutely is not just less inventory, and it is not just one thing. And to the questioner's point, yeah, absolutely, the working capital in the supply chain is probably the single biggest cost to work against and to mitigate. And we know, Marion, you gave the example earlier that supply might be buffered somewhere else in the supply chain, tier 1, tier 2, but it needs to be done in alignment with the whole supply chain. Because if it's not, that could knock a single supplier out of business. A small supplier who all of a sudden has to carry 2 months of extra inventory, that could kill them. So, but it could also, if it's done right and it gets support from the customers, it could save them. So this is the kind of world that we're living in. And again, it's not about one definition. It's lower the water levels, the right inventory for the right occasion, and the right risk, so to speak.
Yeah. We're getting more and more audience questions, but I think just one to finish off on quickly with yourself, Marion. What makes you optimistic about the industry's ability to handle the market in 2026?
Yeah, I think I just want to reiterate what I said before. Every crisis is also a chance, right? And I think we're exactly in this point where we're learning to use the muscles, still finding out which one it is, right? But we'll come out stronger from it if we take also the crisis serious, right? And then we can really have the crisis, or the way we handle the crisis with a good risk or resilience management being a competitive advantage. So it's all about exercising those muscles, preparing the scenarios, playing them through, having the data ready, and then come out stronger than the others from it.
Yeah, Marion, you've ended on a very hopeful note, which I really appreciate. And it's been so valuable speaking to you about this. Thank you so much for joining us.
Thank you for having us. It was fun.
Thank you. And we will see Marion at ALSC Europe in March, as we mentioned already. So don't forget to register for that. Just before we close off, we wanted to speak a bit about the risk of the upcoming USMCA negotiations. It was a major topic at ALSC Mexico at the end of last year. And Lizetta Gracida, who's the Senior Director of External Affairs and Trade Compliance at Toyota Mexico, spoke a bit about some of the challenges that the market is facing there, and the idea of uncertainty being a real core risk. So we have a clip to show you of Lizetta speaking a little bit about that. Obviously, it's something that's affecting the Mexican market, But as we've seen from this year and last year, these things spill out globally and tend to affect the industry as a whole. So we'll see if we can play that little clip for you now.
Say that more than policy itself, what the industry needs right now is certainty.
Yeah.
That is the magic word. We need clear rules, no sudden changes that disrupt our industry. For example, under the current trade, under the current tariff context, the industry is facing a great deal of uncertainty, whether tariffs will increase, whether new tariffs will be imposed, or how long these tariffs will stay or remain in place. On the other hand, there is also uncertainty in terms of the USMCA, on how the review or the renegotiation will unfold, and also how long this review will take to the parties to achieve an agreement. And that is just from the trade perspective. But if we go into Mexico and within the Mexican issues, the auto sector is also exposed to a series of sudden changes that are impacting the business environment and affecting the auto companies. And those changes go from regulatory matters to constitutional reforms. And as an example, we have during this half a year, we have seen the constitutional reform to the Amparo law, to the customs law, to the tax code, the implementation of the electronic value manifest that I'm sure you have talked about this before, and also the potential increase of the most favored nation tariffs that will impact
non-FTA.
Yes, for those countries with which Mexico has no free trade agreements. So this environment, of course, is creating a lot of uncertainty. And here, what the OEMs, the industry, would request to the government to prioritize is to provide regulatory predictability. And meaning that we have workable rules and realistic timelines, so that the industry and the OEMs can really operate under true legal certainty.
So, Chris, obviously we heard Lizetta speaking a bit about how it would be great for the industry to have more predictability in terms of regulations. And speaking about USMCA, that was only a couple of months ago. Now it's even more up in the air. We don't know with the trade relations between the US and Canada what's going to happen with it. Where can companies kind of act independently, regardless of what's coming down the line this year for the USMCA?
Yeah, well, it's a great question, and then obviously a question with a capital Q, I suppose, because as you say, there's so much we don't know, and we started the year after the Venezuela strikes, also with potential incursion into Mexico or risks of that. So clearly there's a lot of things kind of at stake here. I mean, again, if you're a logistics manager or even a supply chain chief supply chain officer, unfortunately, you still can't or maybe have a limited ability to influence ultimately what gets agreed in this deal. And one of the things that Lizetta also explained at the event, and she alluded to, was potentially the constitutional reforms that the U.S. will ask of Mexico to address also issues around drug cartels and violence and rule of law. So it does throw a lot of uncertainty along with the Canadian issue. But coming all back to it, I mean, to a certain extent, the supply chain just needs to keep going and moves on. I mean, perhaps it was surprising the extent in 2025 to which despite the tariffs, which at one point, don't forget, for certain products out of Mexico, for certain automotive products out of Mexico, would have gone up to 52%, right? If you were not USMCA compliant, if you were hit with the so-called AIPA, kind of fentanyl tariffs plus the auto tariff. So at some point, we were confronted with these crippling tariffs. and yet we're past the worst of those, perhaps with the agreement, or at least temporary reprieve. But the supply chain ultimately carried forward. The OEMs made the decision to ship, to continue producing where it made sense, where the products were still going to sell. They didn't want to lose market share, because if you held it back too long, somebody steps in and you lose market share. So for the time being, whilst those production remain, even with a higher tariff or even with this uncertainty, you need to serve that supply chain as best as you can, but be very, very cognizant of the changes that are coming. So, I mean, even today, General Motors announced more investment in some U.S. plants. Stellantis, obviously, a big program. A lot of investment. There's no question that where certain products, as I mentioned earlier, can localize, or aspects of the supply chain can localize, they will where it makes sense. So you in the supply chain, be a logistics provider, be you a tier 1, tier 2, you definitely need to understand which way the wind is blowing and be ready to move and serve those changes, as well as support the ongoing production, this sort of performing whilst transforming kind of mantra. And I think going back to this could come through several scenarios, so we do need to be prepared. But again, I would also point out, Toyota has just, I think in Canada, they have a big investment in RAV4 production, increasing new model launch. Then the main production, the core production for the RAV4 for North America and other global locations is Canada. For the time being, that's a decision Toyota has clearly made and is staying with. So if you're serving Toyota, you can't move ahead of them either, so to say. You still want to. So there is a bit of, and so how do you mitigate the cost elsewhere? How do you still make it work? But I would sort of say you need to be very closely tracking where things are going, so that you can be ready to serve multiple sides of the border. You have to be ready to move with your customers, and likewise look at other opportunities, because you know what, Canada's looking for them. Nobody wants to see this happen. I don't want to see it happen, that there's a rupture in the North American supply chain, but the Canadians are looking at alternatives. It has a trade deal with the EU, for example, so maybe there's more opportunity there. There's obviously the controversial stuff with China. We'll see where that goes. But where one opportunity drops, another may arise. Another manufacturer might come in with a different business model. So it's not any one of those things. It's not just a case of, I'll choose, put my cards on the table and go one. You need to be ready across multiple ones. So that's the best I think those in the supply chain can do. And I'll go on for another hour here if I don't stop. But let's just say, which was alluded to earlier well by Marion, it's not just tariffs, it's compliance. It's other regulations that need to be managed and met, whether it's USMCA, which brings a lot of compliance, and others. So you also need a depth of understanding. You need close work with suppliers to comply on those issues, and for sure technology that can help with complex documentation, complex tracking of tier end supply bases, etc. So that's the sort of couple of ideas.
Yeah. Well, it's great to end with so many ideas for people to go away and think about. Chris, thank you so much.
Thank you, Megan.
It was excellent to have you here in the studio with me. And thank you all in the audience for joining us today as well. Before you go, I just wanted to highlight again some of the events that are coming up this year. You can see we've got events all over Europe. We've got one in the UK in June this year. Global, ASEAN, Mexico. We're pretty much everywhere you might be. So make sure you scan the QR code and find out some more about that. And we also have some great live streams coming up this year. You can watch some of the 2025 live streams on demand, where we had input from the likes of Aston Martin, CATL, Honda, Nissan, Volkswagen, and more. And you'll see that we have plenty coming up this year, so be sure to register for those as well. And please feel free to share today's session if you find it helpful. We would really appreciate that. So yeah, thank you all so much for joining. It's been excellent to have your input and questions, and we look forward to seeing you next time. Thank you.